Hi guys, this is Siaj and welcome back to my channel ACCA and Beyond, and in the FR video series. And today's chapter is going to be chapter number 2, which is about tangible non-current asset. So in this chapter we are going to learn about different IAS standards. It's not important to learn which IAS standard name or their standard number, like the IS-20 or IS-23. It's just important to learn what that standard means. So in this chapter we are going to learn about IAS 16, which is depreciation and revaluation, and IAS 23, which is about borrowing cost, and IAS 20 about government grants. These are very easy concepts, especially the borrowing cost one and the government grant one. If you understand it properly, if you just listen to my lecture once or twice, it's very easy concept to grasp. So let's get started. And this video might be divided into two separate videos because it's a bit of a lengthy chapter. Okay, so first we have IAS 16, property, plant and equipment. So property, plant and equipment, or PPE, are tangible assets that are held by an entity for more than one accounting period for use in the production or supply of goods or services, or for rental to others, or for administrative purposes. We all know what tangible assets means, which assets which can be touched. So they are tangible assets held by an entity for more than one accounting period. So they mostly need to be non-current assets, and they can be used for production or supply of goods or services, or rental to others, or for administrative purposes. An item of a PPE should be recognized as an asset when it is probable that future economic benefits associated with the asset will flow to the entity, and the cost of the asset can be measured reliably. So it is we are certain that we will receive some benefits, economic benefits, from this asset in the future, and that we can analyze the cost of the asset, or we can factor in the cost of the asset reliably. So initial measurement, an item of PPE should initially be measured at its cost. So first we obviously measure it at its cost. Then now these costs include involved in bringing the asset into working condition. So all the जितना भी अपना खर्चा हुआ है वो asset को एक working condition में लाने के लिए, that all of these costs should be included in the initial measurement. Include in this initial capital cost, such as the cost of the site, preparation, delivery cost, installation cost, borrowing cost, in accordance with IS-23, which we'll see later in this chapter. So all of the cost we have incurred to bring this asset into a working condition will be included in the initial measurement. We have expense items such as fuel, training and warranty cost should be written off as incurred. Now these costs such as fuel, training and warranty costs should be written off because these are daily expensive. So these will not be included in the initial measurement of the asset. Now let's talk about dismantling costs. The present value of these costs should be capitalized with an equivalent liability setup. The discount on the liability would then be unwound over the period until the dismantling costs are paid. This means that the liability increases by interest rate each year, with the increase taken to interest expense in the statement of profit or loss. You may need to use the interest rate given and apply the discount factor. R is the interest rate and the N is the number of years to the settlement. Okay, now let's look at an example. We have a very big machinery in our manufacturing process, and let's say after 10 years we will have to dismantle that machine. Now the dismantling cost after 10 years is going to be 100 rupees. Now we need to capitalize this too. We need to include this in our initial measurement too, but the cost will be 100 rupees after 10 years. What is the present value of this dismantling cost? We can only capitalize that amount. So how do we find that? So to find that, we'll be given a rate of interest in our question. Uh, let's say that is 10%. Okay, 1 second. Okay, so where was I? Yeah, the rate of interest which we are going to be used is 10%. So that gives our present value of the 100 rupees as 38.55 rupees. How do we calculate that? We use this formula which I am going to explain it to you right now. Just understand the concept. So if I have to incur 100 rupees after 10 years, the present value of that 100 rupees right now is 38.55. Now I am going to include this 38.55 as my capital, maybe not capital, as I'm going to include this as the cost of my asset. And I'll create the liability of this 38.55, and every year I will increase it by 10%. So after 10 years this becomes 100. So I'll include this 38.55 as an asset and as an liability. Now let's look at this example, which I hope will clear some things out for you guys. Okay, if an oil rig was built in C, the cost to be capitalized is likely to include the cost of constructing the asset and the present value of the cost of dismantling it. If the asset cost 10 million to construct and would cost 4 million to remove it in 20 years, the present value of the dismantling cost must be calculated. If the interest rate were 5%, the present value of the dismantling, So now we'll have to find out how much needs to be capitalized for this oil rig which we have built. So obviously you are going to include the 10 million to construct. So we already have 10 million. Now the problem is it would cost 4 million to remove it in 20 years. So 4 million after 20 years. So what's the present value? The interest rate was given to us, which is 5%. It's easy. Now we'll just substitute in a formula. So as stated, this is our formula. 1 plus 1 1 upon I r, sorry, 1 upon 1 plus I upon 1 plus r upon n. So r is a rate of interest which is given to us as 5%. So we are going to write it as 1 upon 1 plus, we write it as 0.05. So and raised to the power of n. So n is the number of years which we need to calculate it for. So we'll raise it to 20. So this gives us this formula. Now how do we calculate it? It's very easy. I'm going to take 4 million as 400 and into 1, which gives us 400. Now divided by 1.05. Now we get it as 380, but you need to keep on just press this equal to button 20 times. You need to count it how many times you're pressing it, but you need to continue pressing it for 20 times. One day when I have a calculator, I'll show it to you. I do not have a calculator with me right now, or you can use a scientific calculator also, but I don't have a scientific calculator also with me right now. But one day I'll show it to you. But if you keep pressing this 20 times, you will and then whatever number you get after pressing it for 20 times and multiply it by 4 million, you get it as 1 lakh 15 lakh 07558. So the total to be capitalized would be 10 million plus the amount of the present value of 4 million, which is this amount. Now this will also need to be depreciated, so we divided it by 20, and this is the amount of the depreciation. Each year the liability would be increased by 5%. As I told you, we'll have to create a liability also for that 33 rupees, and every year increase it by 10%, so it becomes 100 after 10 years. Each year it would be the interest rate would be increased by 5%, and in year 1 this would mean that the liability increases by 75,000, which is the 5% of this amount. And yeah, this increase is taken to interest expenses. Okay, we'll as it is an interest, we'll take it to interest expenses in the profit or loss statement. Let's solve this test of understanding. An entity started construction of a building for its own use on 1st April 2017 and incurred the following cost. Purchase price of land. Now you tell me, is this going to be included in initial cost? Of course, this is the purchase price. We have a stamp duty, a legal fees, a site preparation and clearance, materials, labor, architect's fees, and general overheads. Now, all of these items are needed to bring the asset into working condition. But do you think general overheads should be included in the initial cost? No, because it is not specific to this bringing this asset into working condition. Okay. Now, the material costs were greater than anticipated. Now, we're talking about materials. On investigation, it was found that material costing 10 million had been spoiled and therefore wasted, and a further 15 million was incurred on materials as a result of faulty design work. So, in total, we are going to increase it by 5 million. As a result of these problems, work on building was ceased for a fortnight during October, and it is estimated that approximately 9 million of the labor costs relate to this period. So it was unnecessary cost. We didn't need this cost to be in the initial cost, because how do I explain it properly, sorry. ये मतलब ऐसे ख़राब हो गया ना, मतलब ख़राब हो गया तो वो अपनी गलती, मतलब ये हम लोग यूज़ तो नहीं कर सकते एसेट के कॉस्ट में। तो मतलब तुम लोग कुछ भी फालतू खर्चा करो, तुम लोग की गलती की वजह से कुछ भी खर्चा हुआ, तो वो हम लोग तो वो एसेट के खर्चे में नहीं ले सकते ना। सो दिस वील हैव टू सब्ट्रैक्ट दिस -9 million फ्रॉम अ लेबर कॉस्ट। And the building was completed on 1st July and occupied on 1st September. You are required to calculate the cost of the building that will be included in the tangible non-current asset. One second. Yeah, so this sum is very simple. Just one thing, I made a mistake. Except for 25, 5, we have to take 25, which is 10 million plus 15 million. Because on investigation, it was found that 10 million had been spoiled. वो भी अपनी गलती है, उन लोग की गलती नहीं, एसेट वालों की गलती नहीं, 10 million अपनी गलती की वजह से हुआ। एंड उसकी वजह से हमें 15 million का वर्क और करना पड़ा। क्यों? क्योंकि वो वापस अपनी गलती है, एसेट जिसने बिल किया उसकी गलती नहीं है। So we'll minus 25 and minus 9 except for that, and we'll exclude general overheads completely, and we'll just add all of the remaining costs, which, and whatever the new total is going to be included in the tangible non-current asset liabilities. Okay, now let's talk about subsequent expenditure. Subsequent expenditure on property, plant and equipment should only be treated as part of the cost of the asset if it enhances the economic benefits provided by the asset. This could be by extending the asset's life and expansion or increasing the productivity of the asset. If it relates to an overhaul or required major inspection of the asset, the cost associated with this should be capitalized and depreciated over the time until the next overhaul or safety inspection. It is replacing a component of an asset made up of a number of components. Example, an aircraft comprising body, engines and interiors are all with different expected lives. The replaced component will be derecognized, and all other subsequent expenditure should be recognized in the statement of profit or loss, because it merely maintains uh, the economic benefits originally expected by the cost of general repairs should be written off. Okay, so if we are now the initial measurement, I hope you guys are sure about it. If you're not, please let me know. Now we are talking about our subsequent expenditure. So what should be included in PPE after the initial measurement has been done? If we कुछ भी खर्चा, मतलब जो भी हम करें जो हमारी एसेट की लाइफ को बढ़ाता है, मे बी अगर अभी हमारी एसेट की लाइफ 5 साल है, हमने कुछ मेंटेनेंस का खर्चा किया जिसकी वजह से लाइफ 7 साल या 8 साल हो जाती है, तो वो खर्चा हम लोग सब्सिक्वेंट एक्सपेंडिचर में ले सकते हैं। अगर कुछ ओवरऑल या रिक्वायर्ड मेजर इंस्पेक्शन है, मतलब ये जैसे बहुत बड़े बड़े मशीन्स नहीं होते, उसमें रिक्वायर्ड होता है, गवर्नमेंट रिक्वायर्ड होता है कि लाइक 10 साल में या 15 साल में एक इंस्पेक्शन होना ही चाहिए या 5 साल में होना ही चाहिए, तो वो खर्चा हम लोग सब्सिक्वेंट में डाल सकते हैं। वो डेप्रीशिएट भी होना चाहिए जब तक नेक्स्ट इंस्पेक्शन नहीं हो जाती तब तक। एंड क्या अगर कोई बड़ा सा एयरक्राफ्ट जैसी कोई बॉडी हो जिसमें मतलब हम लोग हर चीज़ की अलग अलग होते हैं ना, मतलब एक एयरक्राफ्ट है उसमें एक कोई सिस्टम है उसकी लाइफ 5 साल है, एक सिस्टम है उसकी कोई लाइफ 10 साल है, तो अगर ऐसा कुछ रिप्लेस करते हैं तो उसका खर्चा हम लोग गिन सकते हैं। Okay, a piece of machinery has an annual servicing cost of 10,000. During the most recent service, it was decided to replace part of the engineering, meaning that it will work faster and produce more units of product per hour. The cost of the replacement is 20,000. Would this expenditure be treated as an expense or an asset item? So, इसमें हमें बोला हुआ है 10,000 जो है ये हमारा एनुअल सर्विसिंग कॉस्ट है। अब ये एनुअल सर्विसिंग है तो it is an expense. One more thing if I forgot to touch over here, yeah, अगर कोई जनरल एक्सपेंडिचर जनरल रिपेयर्स का जो खर्चा होता है ना, दैट इज़ आर एक्सपेंस. ओके, during the most recent service it is decided to replace part of the engineering that will work faster and now it will work faster and produce more units of product per hour. Now it is increasing, it is benefiting our asset, so the replacement cost of 20,000 will be treated as an asset expense. And so the 20,000 replacement part enhances future economic benefits and so is an asset and increases the cost of non-current asset in the statement of financial position. Now second topic which we are going to be talking about is depreciation. Depreciation is a bit confusing, so I need you guys to focus a little more. So let me just drink water 1 second. Okay, so depreciation is a systematic allocation of the depreciable amount of an asset over its useful life. Depreciable amount is the cost of an asset or other amount substituted for cost less its residual value. Depreciation must be charged from the date the asset is available for use, that it is capable of operating in the manner intended by the management. This may be earlier than the date it is actually brought into use. For example, if staff needs to be trained for it, depreciation is continued even if the asset is idle. So if maybe an asset is built, it's ready, but we have not started using it yet, that doesn't mean we will not charge depreciation. Depreciation will be charged from the day it's available for use. Yeah, so maybe a machine is built up, but we have not yet started our manufacturing process yet. That doesn't mean we're not going to charge depreciation for it. If it's ready, if it can be used from tomorrow onwards, from today onwards, we are going to start charging depreciation for it. We are not going to wait for anyone. The depreciation method should also reflect as fairly as possible the pattern in which the asset's economic benefits are consumed by the entity. Possible methods include the straight line, reducing balance, and machine hours. Yeah, these are the three methods which we use for depreciating our assets. Yeah, and there's sums based on all these three methods. Mostly these two methods are used. I rarely have seen sums which use this method, but yeah, I'm going to explain all these three methods for you. A change from one method of providing depreciation to another is permissible only on the grounds that the new method will give a fairer presentation of the results and of the financial position, does not constitute a change of accounting policy, and is a change in accounting estimate. The carrying amount should be written off over the remaining useful life, commencing with the period in which the change is made. And if an asset is made up of a number of components, each separate part of the asset should be depreciated over its useful life. Example, an engine with an aircraft will need replacing before the body of the aircraft needs replacing. So maybe if you are using a straight line method for depreciating, we can change to reducing balance if only and only if it gives a fairer representation of our depreciation. Yeah, and it does not constitute a change in accounting policy. Many times companies or organizations change the accounting policies, use the change in accounting for depreciation just to show a more beneficial financial position for their company. So that's not allowed. Only and only if you can state that the change in accounting for this depreciation will show a fairer representation, only then you can change your method of depreciation. And yeah, if there is a very big machinery you are using it, and maybe the useful life of this component is 6 years, for this it is 4 years, for it is 3 years, and for this one it is 8 years, then you need to depreciate all of these components on their different lives. Okay, so an asset cost 1 lakh to and has an expected value of 10 years. The purchaser intends to use the asset for 6 years, at which point the expected residual value will be 40,000. What is the depreciable amount? It's very easy. So 1 lakh is a cost, and the residual amount we minus it from the initial cost, because we are going to get that 40,000 back. Okay, so we'll not take it as in will not take it for the amount that needs to be depreciated. Residual value is the amount we'll get back. Maybe we'll sell that asset or something, so that 40,000 we'll get back, and it is already at current prices, so we don't need to find the fair value of that amount, the present value of that amount. Okay, so we'll minus it, we'll get 60,000, and it has an expected useful life of 10 years, but the purchaser intends to use the asset for 6 years. So I do not care about the 10 years, we are going to depreciate it for 6 years, because after that the purchaser is going to throw that machine away. So we get an depreciable amount of 10,000. Now, review of useful and residual values. Useful life and residual values. Useful life and residual values should be reviewed at the end of each reporting period and revised if expectations are significantly different from previous estimates. The carrying amount of the asset of the date at the revision, the carrying amount of the asset at the date of the revision, less any residual value, should be depreciated over the revised remaining useful life. So after every reporting period, this useful life and residual value should be again be revised, or you look into it, like any changes have been made to the machinery which may cause the useful life to increase or decrease, or the residual value to increase or decrease. We need to identify them, and if there are any significant differences, we need to investigate them. Okay, let's look at illustration number 4. An entity purchased an asset for 20,000 on 1st January. Straight line depreciation of 5,000 per annum has been charged, assuming a 4-year useful life with no residual value. On 1st January, the annual review of the asset life was undertaken, and the remaining useful life of the asset was estimated at 4 years. 1 second. Okay, so nowhere have they explained the 3 different ways of depreciation. So first, let me explain that to you. So first, we have our straight line method of depreciating. So it's very easy. Let's say an asset costs 1 lakh and it is in use for 10 years. So for 1 lakh, no residual value for 10 years, what will be the depreciation charge? It will be 10,000. So every year I'm going to minus 10,000 from a 1 lakh. We'll get a 90,000, 80,000, 70, 60, and after 10 years the value is going to be 0. That's it. That's a straight line method. It's very easy. Now I am going to be talking about the second method, which is what was it? I forgot. Second one was reducing balance. Yes. So again, our asset cost, okay, let's take 50,000 this time, and in the question it will be stated that the asset is depreciated using 25% or 20% or 30% on a reducing balance method. So for this sum, I'll take it as 25%. So every year from our 50,000 we are going to subtract 25%, which gives us, okay, 50,000 minus 25%. So after 1 year it is going to be 37,500. After 1 year, again from this 37,500 I am going to be minusing 25%. First I need to find out how much 25% is for to show our working, which is 9,375. So from 37,500, if we minus 9,375, it will give us 28,125. Now I again need to find out the 25% of it, which gives us 7,031.25. Now I'm going to minus, गलत हो गया. So that gives us 21,093.75. So this was our value after 2 years. This is after 3 years. So this way we are going to subtract 25% each year until the answer we want to find out. So this way is what we are going to use the reducing balance method. And the third one is very easy. It's machine hours. It's very easy. I'll just explain it to you guys. So let's say asset costs 70,000, and this asset can be used to make let's say I can use it for 1,000 hours. So I'm going to it's very simple. I'll charge, and it's very simple to calculate. 70,000 divided by 1,000 will give me 70 rupees as a rate for 1 hour. So let's say in first year I used it for 300 hours. Okay, 70 into 300 will give me 21,000. That's our depreciation. And sorry, that's a value after using it for how much hours? Yeah, 300 hours. Next year's, let's say we used it for 200 hours. So that gives us 14,000. Into 200, that gives us 14,000. So 49,000 minus 14,000 is 35,000. So this way, about like how much of the machine hours you are using, you just minus it from your total initial value. Okay, now let's talk about major inspection or overhaul cost. Inspection and overall costs are generally expense as they are incurred. They are, however, capitalized as non-current assets to the extent that they satisfy the IAS 16 rules for separate components. So, where this is the case, they are then depreciated over the. So, overall cost or general inspection cost which are incurred can be capitalized with the non-current can be capitalized as non-current assets, and they need to be depreciated over their useful life, that is until the next inspection. So I talked about this earlier also. Let's see an example, and after that I'm going to stop for today's video. So an entity purchased an aircraft that has an expected useful life of 20 years with no residual value. The aircraft requires substantial overhaul at the end of 5, 10 and 15 years. So this is an inspection period. The aircraft cost 25 million, and 5 million of this figure is estimated to be attributable to the economic benefits that are restored to the overhaul. In the year 6, the cost of the overhaul is estimated to be 6 million. So calculate the annual depreciation for the years 1 to 5 and for years 6 to 10. So the aircraft is separated as two separate components for depreciation purposes. First, we have the initial value of the 5 million depreciated over 5 years. Yeah, you can see over here. So that 5 million is divided into 5 years, because after every 5 years we have an inspection. So the yearly depreciation cost would be 1, and the 20 million is for 20 years. Yeah, you can see this 25 million, out of this 5 million is estimated as inspection cost. Yes, so this will give our 20 million. So 20 million for 20 years will be 1 again. So depreciation charge for every year is going to be 2 million. Now for the 6 to 10 years, our overall cost has increased to 6 million. So again, it's very simple. 6 million upon 5 years will give us 1.2 million per year, and the aircraft depreciation will remain the same, which is 1 million. So our total depreciation charge for 6 to 10 years is 2.2 million. I hope you found this video helpful. I hope you understood concepts from this video. If you did, please do let me know if you have any suggestions regarding my videos, if their voice is not stable, if my way of speaking, my manner of speaking is a bit confusing, or if I'm speaking too fast or too slow, please do let me know. I can improve them, I can change them, I don't know. So yeah, if you found this video helpful, please do let me know in the comment section, and thank you so much for watching, and please do subscribe to my channel. Thank you.